Good morning, everyone. It is Wednesday, April 24th, 6 a.m., half an hour before the market opens. And I've got my camera back up and running. It's been a little while, but it's good to have it back. Let's see how the market is doing today. We're going to take a look at our futures first and make sure that this is updated. Yes, there we go. So S&P 500 up just a tiny bit, 10 basis points, a little over. So 10 basis points. Then we've got our NASDAQs that are up significantly at 60 basis points. So that is beyond random right there. And then we have our Dow that is down about 15 basis points. So we got a mixed bag right here. This is pretty unusual. It's not often that we see the NASDAQ and the Dow polarized, meaning one negative, the other positive, and at least one of them is beyond random. It's not too uncommon to have, for example, say the Dow down a tiny bit, the NASDAQ up a tiny bit. That would be a lot less strange. But right now we have a pretty extreme with this NASDAQ significantly up and the Dow futures just a tiny bit down. So what that means is that there's likely some money movement out of blue chips into NASDAQ. Let's take a closer look at that. If I look at yesterday on the Dow, we were up 0.69% right up into that EMA 20. And if we go to QQQ, we're up 1.49% right up into our EMA 8. So the NASDAQ was up significantly more than the Dow, but it didn't look like that huge of an extreme versus this morning when we're opening up. So it looks like maybe some money started moving out of blue chip into tech, and that's continuing on into today. It's also indicating that, well, that this could just be an effect from earnings. We have some pretty big earnings coming up. We basically finished with the financials reporting for the most part, and that tends to roll us into the tech. So NASDAQ up or money moving into NASDAQ, perhaps in anticipation of tech earnings. I made a comment, I think it was last week, where I said money managers or institutions, they tend not to short before FANG stock earnings. They like to go long or stay neutral ahead of FANG stock earnings because the largest cap stocks and the tech stocks, they have a pretty good track record of beating on earnings and jumping upwards. And when you short, you have unlimited risk. And when you go long, you have limited risk. So there's a natural bias towards going long, or if we choose not to go neutral right before earnings. So we're probably getting a little bit of that effect as well. Now, what does that mean? That means that as long as tech earnings do okay, then we have the potential to keep on moving up. We have this EMA 20, and then we have the MA 50. These are pretty spread out, unlike the S&P 500, which had the EMA 50, I'm sorry, the EMA 20 and MA 50 pretty close together. So we could keep on moving up as long as earnings do well. We have these two spaces in a row. And then just like the S&P 500, it's unlikely that we're going to go straight up to the all-time highs and challenge them and then go beyond them. It's just very unlikely. It's very rare that we go down and bounce all the way back up. We saw that in COVID, but outside of that, we almost never see that. They call that a V-shaped recovery, even though this is not, I wouldn't call it recovery because we didn't fall all that much. We got our 5%, right? Or maybe 7 or 8% in the NASDAQ. Yeah, 8% in the NASDAQ. So we have this bounce so far to the EMA 8 based on today's futures and the fact that we have tech earnings coming up. It seems pretty likely that we could get to our EMA 20, if not our MA 50. But at least from where we're standing right now, the probabilities are that once we get there, we're going to come back down. In the Dow Jones, We're already at our EMA 20. We poked above it a little bit. So can we get to the MA 50? Sure, we can get to the MA 50. And that would probably be about it. I also wouldn't be too surprised if we came down from here. As you can see from the futures, money is already starting to leak out of the Dow Jones, or at least money is not as enthusiastic about the Dow Jones as it is about the NASDAQ. So I also wouldn't be surprised if we pull back down starting from here as well. I would say I would lean slightly towards moving up towards the MA50 though. If I look at my S&P 500, we are in between the EMA 8 and the EMA 20. We move pretty strongly above that EMA 8. So it's looking pretty good that we could get to that EMA 20. And of course, if the QQQ hits its EMA 20, then that is a upward force for the S&P 500. And so the S&P 500 shouldn't have too much trouble getting to its EMA 20 as well. But you can see it's mostly flat today. We're basically at yesterday's high, going into at least 20 minutes, 24 minutes before the open of today's session. So I would call it a slight upward bias for today in the S&P 500, a definite upward bias in the QQQ. And for the Dow Jones, it's either or. Let's take a quick look at small cap stocks. I haven't looked at that specifically in a while. So small cap stocks are also almost at their EMA 20. We almost hit it last night and then, or yesterday afternoon. And we are at this pink line resistance right here that we drew, I don't even know how long ago anymore. It was at least several months ago. These three pink lines were several months ago. And we kept saying, okay, well, it breaks out with conviction, then we could run. But every time it broke out, it just fell right back in. So, and then we came down to the bottom a few days ago and bounced right off of it. So these pink lines are still holding, and they've been holding for, like I said, a long, long time. So it looks like at least since 2022. So from here, this is resistance. The EMA 20 is resistance. I wouldn't be too surprised if we break further down. If we come back down from here, of course, if the QQQ is really strong and there's kind of this risk on sentiment in the market, it could move a little bit higher to its MA 50. But as of right now, it doesn't look like it's too likely. And if we don't get small cap participation, then the chances of the QQQ breaking above its MA 50 and then moving on to all-time highs and then going even higher, that's pretty slim. Then we would have a similar environment to what we had in the first leg up, and the upside is going to be limited, or at least we could go up for another uptrend, but it wouldn't be a true bull market. We're just waiting for everything to line up for a true bull market. And right now, if we're going to get it in 2024, it doesn't look like it's going to happen until election time or after elections, where people have more clarity. Once we know who the president is going to be, then we kind of have an idea of policies that are going to be in place for the next 4 years, and that can clear the way for institutions to comfortably put money to work on a longer term basis, and that can give us a bull market, or at least clear the way for a bull market. So let's take a look at VIX. VIX is very important at the moment. We want to see how far it's come down. You can see we never made it beyond this spike up here. Let me move this so I can see the levels. We hit 21. So this day, Friday, was pretty, and Friday, the price action in the market was pretty large on Friday, this one. So that's the one that really, well, this one started it, and then this one brought us all the way down to the point where we bounced. So VIX is down to 15.88. That's pretty calm territory, at least for recent times. So as long as we're in earnings season, I don't really expect to fall back to this 12 to 13 region. We'll probably stay here and chop as long as things are going well. We'll stay down here. That gives us space to move up to those EMA 20s and MA 50s. But if we start seeing this go back up, then that's when we'll know, or that'll be a pretty clear signal that things are ending, and then we'll start our way back downwards. Let's look at bonds. Bonds, yeah, it came up to the EMA 8 and then just started chopping sideways. So we're really, right now, we're just wait and see mode in bonds. So it's not having too much an effect on the stock market right now. We've got our rate decision in about a week, but today, I think today is GDP, right? Today is Wednesday. Tomorrow is GDP. So tomorrow is going to be really big. So there's not too much. There's a petroleum status report that might affect energies or at least oil. But tomorrow we're going to get GDP. So that's going to keep volatility up. So we've got GDP and we have earnings of a lot of major tech stocks coming up. So we're going to have a lot of potential for swings up and down. So we want to be careful with that. And then we have our PCE. So Thursday, Friday are some pretty big news days. We also have consumer sentiment right here. Let's take a quick look at the kinds of stocks we have reporting today after the market. Meta. Okay, so that's a really big one. IBM, blue chip stock now. LRCX, very big and important semiconductor stock. Waste management, also fairly large on the, I wouldn't be staples, it'd be more like a business services, which falls sort of under industrials. Chipotle, a large restaurant, auto parts. So we got some pretty big names today after the market, and one for sure, one FANG stock right here. And tomorrow before the market, we've got Merck, huge healthcare, pharmaceuticals, CAT, a huge industrial equipment, CMCSA, communications. So we got some pretty big ones coming up today and tomorrow morning. And Meta is going to be the big one to watch. So what's been interesting is when we had the financials report, the financials were doing amazing, and then they were getting knocked down after earnings, even though their earnings were great. And now we're seeing sort of the opposite. We've got Netflix, which did very well, actually. And I'm sorry, Netflix followed the pattern of the financials. Netflix did really, 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 really well. They beat by 16.7%. Right? Their revenue was up over 1.35%, and they got killed on earnings. And the excuse in the news was that, oh, they're going to stop reporting on the number of subscribers in like 1 or 2 years, which is a really weird thing for a sudden drop in the stock. I don't believe that's what it is. In any case, it got killed on earnings, even though it had a huge number of subscribers at a huge earnings surprise. And then we had the opposite on which is Tesla. We had the opposite on Tesla, where Tesla reported terrible numbers, a huge surprise to the downside, but they said, oh, well, it's okay because we're going to focus on cheaper cars now. And that was it. And then Tesla is up. So we have the entire earnings this season has been kind of unpredictable. It's not going based on the actual earnings. There's something else internal that is hidden to us as retail traders, some sort of game that is being played right here. So I'm not really trusting earnings right now. And when we can't trust the earnings, then obviously we're not going to play earnings unless we have a way of playing both sides. And we go right back to the technicals and we say, okay, well, anything that the earnings that they say on earnings, it's not the numbers. So they're reacting to something else. And that something else is not directly related to the market. So now we're talking about external forces or at least adjacent forces, not internal forces on the natural rhythms of the market. And those, as we know, only last a few hours or a few days. If war all around the world can only affect it for a few hours or a few days, then certainly something much smaller that is not directly related to the market can only affect it for a few hours or a few days. So with Tesla, what we saw is that it went up yesterday a little bit closer towards the EMA 8. We came down, it came down to that -3 Keltner channel, bounced back up. We are definitely in a downtrend in Tesla. So if I were to play Tesla at this point in time, I wouldn't be super enthusiastic about it. Like, okay, maybe it'll hit its EMA 8, maybe, because Tesla has been really weak. And once it hits that, I'd be shorting Tesla personally. That's just what I see within Tesla. If it's stronger, it'll hit its EMA 20, and I'll be super surprised if it gets beyond the EMA 20. So now it's looking like earnings is just a little bit of a, I don't know, I don't even know the word to describe it. It's just almost like a gambling. It's a huge gamble, much more so than normal in this round of earnings. And so we're just going to go with the flow of the markets. We're not going to care too much about earnings just because nothing is correlating, nothing is working the way it's supposed to work, where every earnings seasons, sometimes there are some stocks that either make huge amounts of money but fall anyway, or miss earnings by a huge margin but go up anyways. But this time it's been basically every single stock. So that's the unusual part of it. And for that reason, we're just going to say, you know what? It only has a temporary effect anyways. Overall, the earnings season is so long, so it feels like the effect is extended, but each individual earnings report only has maybe 1 or 2 days of at maximum of effect. And so we're just going to kind of brush it off this particular season and say, you know what, the natural market force, the major dominant force right now is reacting very technically right now. I've been able to say, hey, well, if this doesn't hold, it's going to break down. Where is it going to break down to? It's going to break down to this purple line or the MA90, and it did exactly that. And then from there, we're probably going to bounce. Where we're going to bounce to, the first area is the EMA 8. If it gets very smooth and comfortable above that, then the EMA 20, MA 50. So far, it's reacting perfectly to technicals. And so we're just going to stick with that. We're going to, yes, the earnings or the GDP report, those things could kind of mess with the timing of exactly when we reach there, but it's not changing the fact that that's where we're moving to and bouncing from. So we're going to rely on the technicals this particular earnings season. All right, so with that, I don't know that there's anything. Oh, we can take, we already looked at sectors yesterday. Basically, all sectors were up. And we know based on the NASDAQ, it's looking like that the tech sectors we're doing a little bit better. Retail, communications, tech, yeah, all right at the top right here. So I expect that to continue today, given on how the futures are for the major indices. Let's see if they're still like that. Yeah, they're still like that. So today, probably tech focused. If you're going to day trade to the upside, I'd be looking at tech stocks. If you're going to day trade to the downside, I'd be looking at blue chip stocks. And other than that, we're just going to wait for our technical levels to play out. So that means in the S&P 500, we're just waiting. We're waiting until we get closer to that EMA 20 to look for opportunities to go short. So that is it for today. Trading very technically right here. we can basically start ignoring earnings and other news because of how technical everything is trading. All right, have a wonderful rest of your day. And yeah, that's it. I will see you in the afternoon.